Hi there, good morning. You're watching Buy Now, Sell Now on ET Now. I am Snehi Shah. With me as always is Cheryl D'Souza, and this is a show where we'll be taking you through all your stock related queries with our experts who will be joining us very soon on the show. But before we do that, Cheryl, let's take a look at the market because we had quite an okay start, but we've tumbled quite significantly from there.
Absolutely. A very good morning to you, Snehi. We could say that it's a pause given the fact that we've had a slew of good news, and the big question that we are asking on ET Now today is that is it the peak of good news for the markets, and that's the reason why you're seeing this sort of a move coming for the benchmark indices. What's key to note is the broader markets they're holding on, and what the sense we're getting on the street as well is the fact that yes, the broader markets this time around are likely to outperform the large caps, and you can see it in today's trading session where you have strong gains coming for the small cap index. It is actually gaining as much as Nifty is losing at this point in time. So if you see a 0.7% uptick for a small cap index, while Nifty is down about 0.7%. Nifty Bank, that one is marginally outperforming the benchmark indices, seeing declines of about 0.4% as we speak. However, if you look at the advanced decline ratio, pretty firm, pretty strong, given the fact that you're seeing an outperformance come in for the broader markets. So you talk about the outperformers today on the Nifty, it is BELs with gains of about 4%. You have Dr. Reddy's, you have Jio Financial, you have Bajaj Finance, as well as Tech Mahindra that are seeing a shade of green. While on the flip side, Infosys is down in excess of about 2.5%. You have Eternal, erstwhile known as Zomato, that is down about 1.9%. Power Grid, Hindalco, Trent are the other set of losers in trade at this point. Let's take a look at what the sectoral indices are or the sectoral print is right now. Is the IT sector that is the top sectoral loser, down about in excess of about 1%. Realty is under pressure. Metals is a bit weak. While on the flip side is the PSU Bank Index that is seeing gains of about 1.7% as we speak. Pharma is holding on to strong gains, about 1.5%. Remember that the way the entire signing of that executive order on cutting the drug prices in the United States is much weaker than what Street was anticipating, and that's the reason why today you have the pharma index actually reversing yesterday's losses. So that's the way how the markets are looking like at this point in time actually, Snehi. It is just a pause given the fact that we've had our days and a very bright days of late.
Well, we have indeed had a very bright day yesterday given the kind of run-up that we've seen in yesterday's trade, more than 900 points. A little bit of a blip on the market is along expected lines today. Let's just pull up the Nifty 50 and take a look at what the Nifty 50 is up to right now, because remember, we were penciled in to open with a 0.5% cut. We were around those levels and we managed to recover, but now we are trading sub the 24,850 mark right now. Around 811 is where we are at. Almost a 0.5% cut coming in on Nifty. So while that is the construct on the market, let's get started with all the viewer queries that are coming in. Viewers, before we go on to the query segment, just a quick reminder, when you write to us, mention your name, mention the stock that you are holding, mention the price that you got the stock at, and please also mention your exact query. That way our experts will be able to help you better. Even if the query is about a stock that you wish to potentially hold in your portfolio, please send us the name of the stock as well as the holding period you're looking to hold the stock for. With that, that's the number on the screen, 865-797-4571 is where you can write to us. But on that note, time now to kickstart our query segment. Joining us on the show today on the technicals, we have Kunal Bothra, who's joining us, and we also have Lancelot Di Cunha, Chief Investment Officer, Value X Wealth Connect, who is also joining us on the show. Let's get started with all the queries. Kunal, we'll begin with you, and let's talk about our first query coming in today. And two stocks in question. It's coming in from our viewer Sangeeta from Pune. She's asking if she should buy KPIT Tech and L&T at current market price. What's your outlook on both of these stocks?
Yeah, in fact, both of these stocks are looking very attractive. In fact, KPIT Tech. So I'll start off with, in fact, with L&T. After the string of underperformance for L&T, I think in the last 3 months or so, when many of the large cap stocks, start to move up higher, L&T was an underperformer. I think at current levels of 3,500, 600, where the stock is trading right now, it's just about trying to play a catch up in terms of covering up the underperformance. I believe the reaction post result for the stock could probably act as a catalyst to the stock price over the near term. My sense is that the stock looks extremely attractive, and if you're looking to build a portfolio, then I think L&T could be a very good bet at current levels. KPIT Tech also, I think, largely I would probably believe that KPIT Tech could be a theme where the stock may come back into an covering up of the huge underperformance. And over the last many weeks, I've been saying that the IT stocks, especially the large cap and the mid cap names specifically, I think these stocks could come back to their respective 200 moving averages. So I think in that sense, there should be at least another 10 to 15% upside for stocks like KPIT Tech over the next 3 to 6 months. So you can try and encash that.
All right, so that's the take coming in on KPIT Tech as well as L&T. Let me take this next query then. We have this one coming in from Ekam Bararia, who's writing to us from Hyderabad. Wants to know about NTPC 200 shares at a price of 380, Tata Power about 200 shares at a price of 400 rupees per share. He wants to add some more in either of the counters, but he wants to know which one should he actually add up in his portfolio. Very good morning to you, Kunal. Good morning to you, Lancelot. And this query is for you, Lancelot. Between NTPC, between Tata Power, if someone has to add some more in the portfolio, which one would that be and why?
So I would go with Tata Power on this because Tata Power has a greater retail distribution arm where retail power distribution always is more profitable than than merely power generation and distribution to the grid. And Tata Power is also moving into the home lighting business, which I think has a great potential going forward. So even Tata Power is setting up the retail EV charging stations along with various petrol pumps, along with housing societies, building complexes, and the power rates that they will be charging there or the recovery margins that they will earn there will be much higher than what is applicable in the general business. So I would go with Tata Power and as an option to accumulate as opposed to NTPC, which is purely a power generation and business.
Power is being preferred over NTPC by Lancelot. That's the take coming in. Kunal, we'll come back to you. Next query coming in from our viewer, Shaurya, who's writing to us from Gurugram. He holds shares of IRCTC. He's not giving us the quantity, but his buy price is 802 rupees per share. He's asking if the stock will ever cross that level, or should he just sell the stock and book some losses right now. He says he can hold for 3 months. Do you believe 3 months is a fair period for the stock to cross that 802 level? Do you think this is possible in the next 3 months?
Yeah, I think it's very much possible. First of all, I would suggest that have some bit of patience because large cap stocks, they can get into a zone where these stocks underperform. But then when these stocks make a comeback, you would probably maybe at a point where you may repent if you've sold the stock earlier. So don't look at this as just a short-term investment. I understand that over the last 3-6 months, you may have been holding on to the stock even maybe prior to that. I believe stocks like IRCTC, I think these stocks are making a very good comeback. In fact, what's happening is on the weekly, monthly charts, many of these railway stocks, and especially stocks like IRCTC, have come back into breakout modes on the indicators. Now, that is the first signal which we wait out for. Once these stocks confirm breakout on the indicators, the stock gains momentum, and then these stocks gradually cross back above their previous resistance points or major resistance point. Now, in this case for IRCTC, the first major resistance point is around the 820 mark, which currently is the 200 DMA for IRCTC. My sense is that over the next say 3 to 4 weeks, the stock should be ready for a breakout above that 820 mark on the upside. So I would suggest to hold on to the stock. If you're looking to sell at cost price, then maybe there could be a possibility that in the next 1 to 3 months the stock may come back to those levels. But even if you're looking at holding on to the stock for the next say long term, if you can extrapolate a time frame, that would also be a good strategy for IRCTC.
All right, so that's the take coming in for IRCTC. This one is coming from Mohit. He's writing to us from Ludhiana. And he's already has one of the OMC in his portfolio, that is IOC or Lancelot. He's saying that he wants to add HPCL or BPCL in his portfolio for a period of 3 years. He wants your guidance on which one do you think fundamentally would be the right choice. Given the fact all 3 of them are OMCs, all 3 of them are PSUs, also the fact being that all 3 of them kind of move what happens in the global crude oil market. Keeping that in mind, which one do you think is a better bet between HPCL and BPCL to add? And should one actually add or have that large an exposure to OMCs in a portfolio?
Well, I think if one is looking to add, either HPCL or BPCL in the portfolio, I would go with BPCL at this point in time because the stock is looks a little bit more attractive as compared to HPCL. It also has a large business which is on the retail side, which is doing much better in terms of production, etc. And also when you look at it in terms of leverage, the leverage is a lot lower than HPCL. So to that extent, there's a lot more reduced risk as far as downside is concerned. So I think one should be better off buying BPCL as opposed to HPCL at this price. Whether one should have a large, OMC in the basket, in your portfolio, I think one needs to look at it. At the end of the day, these are mostly commodity stocks. So you buy into these companies when the valuations are low and you're at the bottom of the commodity cycle, because when the cycle turns, you will start to see improved, profitability in these companies. So given that they are basically refining companies, low crude prices means they will have better margins, and also it means that they will keep prices relatively lower, and that could mean increased consumption. So I think, at this point in time, the prices have just come off. Crude prices have come off, and that augurs well. So one should look at, maybe adding it at this point in time and keeping reasonable exposure to your portfolio for the OMCs.
Coming in on all of those OMC's names from Lancelot. But on that note, viewers, time to slip into a very short break on this edition of Buy Now, Sell Now. Keep writing to us, and we'll once again begin addressing all your queries on the other side of this very short break.
But yes, viewers, let's get back to taking all of our stock-related queries. We have Lancelot as well as Kunal, who've been patiently waiting by and to answer all of your queries. Thank you so much, Lancelot, as well as Kunal, for actually waiting by patiently while we had managements that we needed to speak with at this point. Let me actually continue taking the query then. And the next query that I have is coming in from our viewer, that is R.K. Ahuja. Wants to know about Awas Housing Finance, 100 shares at a price of 1700 rupees per share. He wants to know about the long term, but he's saying that the stock has actually come down over the last 10 to 15 days by about 25%. Kunal, let me take to you this query to you. What should he do? Should he hold or look to exit today?
No, I think you should hold on to the stock. Over the last 2 weeks, I've seen the stock in terms of the recent correction. I think it cracked from 2200 towards sub 1800 mark. It's now finding its feet back again. And the charts, when you look at this in terms of the context of the last 6 months, 8 months, the volumes have started to improve for Awas Financials. The stock has formed a bottom sub 1500 levels. Slowly and gradually, the stock is moving up higher. Yes, the beta of the stock is very much high. In that scenario, it's always better that you start buying these stocks at lower levels. And right now, the stock has come back to that kind of a zone. So I would suggest a hold.
Call coming in from Kunal on Awas. Lancelot, we'll come to you. Next query coming in from our viewer Ramesh, who's writing to us from Hyderabad. Stock in question is Root Mobile. He is holding 60 shares of the company at 854 rupees per share. He's asking, what is the future prospects of the company? Can he continue to hold for the long term, or should he book his profits right now and exit Root Mobile? He's got 60 shares at 854 rupees per share. What's your advice here?
While, because this business is actually evolving a little bit in the space, and so that will be able to he will be able to see good growth over the next 2-3 years. Initially there was a very high margin business, and then it sort of stabilized, and now over a period of time, you are seeing growth sustain over longer periods of time, and in different market cycle conditions. That should be that should help the company in terms of managing the downturn better than going forward. So we should be able to see good growth coming in from this company, both from its revenue as well as margins, and that should drive profits higher. So I think from a long-term perspective, if you're looking at the next 2 to 3 years, one can stay invested, as valuations also are not very expensive. This is still looking reasonably valued at this point in time, factoring the next 12 months earnings. So he should look at holding on to this stock.
Next query then, and this next query that I have is coming in from KYN Swami. Kunal, let me take it to you because he has Bank of India, 2,000 shares at a price of 126, about 1,000 shares of Karnataka Bank at a price of around 205 rupees per share. He wants to know what's your suggestion on both of these counters, how are they looking on the charts to you?
Well, I think at current levels, the risk reward for both of these stocks is attractive, Karnataka Bank as well as Bank of India. My sense is that maybe the worst for these stocks in the last 9 months, 12 months in terms of price correction is behind, and these stocks would now get back into a stable recovery process. So I think it's a good zone where you should look to hold on if possible, and if in case these stocks they dip down further, say by another 3-5 percentage points, so over the next in a couple of weeks, that could be a point where you may look to even average further.
Okay, that's a take on Bank of India. But Kunal, next query also coming in for you. It's actually with going with the banking pack itself. Our viewer, Mr. Ghosh Tata, is writing to us from Delhi, and he holds 1,000 shares of IndusInd Bank at 830 rupees per share. He's asking if he can add more. He doesn't mind holding for any period for the long term as well. So, what's your take on IndusInd Bank? Good price level to add more right now?
Yeah, I think it's a good price to add the stock, because when I'm looking at the charts on the short term, the last 1 week or so, from 850 levels towards 780 where the stock has corrected, the indicators are coming closer to the oversold territory for IndusInd Bank, where we are looking at this on the daily charts. So there could be a possibility that say 10-15 rupees lower from current levels, 760, 765 thereabouts. That could be a very good zone where I would believe that the indicators could come into a deep oversold territory, and that could invite some sort of a bounce back into the stock in the near term.
All right, so that's the take coming in on some of those banking counters. This one is coming in from Giridharan, who's writing to us from Salem, Tamil Nadu. And he's holding two stocks. He's in huge loss is what he's saying, Lancelot. One is Tata Tech, about 550 shares at a price of 1,060 rupees per share. And Geo Financial also, 330 is a buy price, above 1,500 shares of these counters. What should he do actually, given the fact that he is actually in severe losses for both of them, and also the quantity is huge?
Both these stocks, when you look at Tata Tech and Geo Financials, they were basically, after listing, people have been accumulating the stock, and they were very successful in their listing, and thereafter there have been good demand. But when you look at the financial performance of both the companies, they were highly priced. Tata Technology was trading at almost 60 times its earnings. And now that earnings have come out and the guidance given for the whole year is that the company will grow at maybe another 25% growth, it really doesn't justify, such a high multiple, and hence the stock has corrected. Having said that, I think most of the negatives are now factored into the price and the current price levels. We have seen that performance can only improve going forward. So one should wait for a quarter or so, review the financial performance, and if it is in line with the outlook that has been given, then one can look at adding Tata Technologies. Even at this levels, from a long-term perspective, it should give you good growth as it operates in the engineering space, which is a growth segment, for the software industry. As far as Geo Financial is concerned, there's a lot riding on its joint venture in the asset management space with BlackRock coming in as a partner. And one should we will have to wait and see how these products are launched. They are mostly like to be mobile and digital products, so that it'll be easier to penetrate the market. So given that background, as well as their existing business that has been growing, you need to wait for a while before this business actually settles down and starts generating profits, and maybe look at that time to evaluate whether it is an entry, it's worthwhile adding to the portfolio at that time. But at this point in time, I think it's too early to look at Geo Financials, because you need to see how the initiatives taken by the company, how they unfold over the next 2 to 3 quarters, and that would give you a very good idea about its valuation going forward.
On Tata Tech as well as Geo Financial. Kunal, we'll come to you. Next question coming in from our viewer Vignesh, who's writing to us from Bangalore. Stock in question is Amara Raja Batteries. He's holding 145 shares of Amara Raja at a price of 1040. The stock at 1015 thereabouts. So slight bit of a loss is what he's facing. He's asking if we should add more at the current level or wait more, and would this be a good hold for the long term?
Yeah, I think it could be a good stock, from a long-term point of view, because it seems like that, on the monthly charts, on the quarterly charts so far, the stock is forming a bullish candlestick pattern, and that I believe has come back after 3 quarters of a straight price correction. Even if you look at this as a, minor process of a bounce, the third quarter, high for the stock, which is around 1200 mark, I sense that the stock could be heading towards that 1200 levels over the next 3 to 6 months. So which means that current levels of 1000 thereabout, I think could be a good entry point for the stock if you have a time frame of 3 to 6 months for Amara Raja Energy and Mobility.
All right, so that is the take coming in on Amara Raja. Kunal, coming right back to you. Our viewer has not mentioned his name, but wants to know about NBFC stocks. And the stocks that he has is L&T Finance, Shriram Finance, Utkarsh Small Finance Bank, as well as AB Capital. Wants to know whether he needs to make a shift within these stocks in his portfolio. He's not mentioned the buy price or any quantity. His view is for short to medium term.
No, I think you should hold on to your portfolio. Now, of course, the likes of Bajaj Finance, etc., these stocks have done reasonably well. But, the data over the last, 1 week or so has shown that, the momentum is shifted back again to the tier 2 names on the NBFC pocket. So you've seen AB Capital come back about 200 levels. L&T Finance is on the verge of breaking the last 2 week of swing higher on the 170 mark. Shriram Finance has recovered after the 10% correction the stock had shown just about a week or two back. So which means that these stocks are making a comeback for themselves. Even if this is a process of, say, a short-term recovery, you can expect that these stocks would come back to at least their previous major swing highs, and that should be at least a process of another 5% to 7% on the upside from current levels for these names. I would suggest a hold.
Okay, hold call coming in. Let's move on. And Lancelot, coming to you. Narayana Rudra is the stock in question. We don't have the name of our viewer, but they hold 50 quantity of this stock at 1705 rupees per share. They're asking for your view for the long term, and would it make sense to keep adding this stock gradually going ahead?
Yes, I think Narayana Rudale should do well going forward for the long term if one is looking at investing, because healthcare is growing at a very rapid pace. The inflation in healthcare, which is the increase in prices at hospitals, also augurs well for hospitals, because they're able to recover higher revenue from the same set of patients. Narayana Rudale also has an offshore hospital where it caters to exclusively to clients who are looking at, getting treated from the UK, Europe, as well as from the US, and then they get reimbursed under their medical aid schemes. Additionally, they are looking at, entering a general insurance or a medical insurance setup where they can benefit from the insurance network that will get set up. And if you look at the additions to the bed capacities, I think they are increasing the bed capacities also significantly in the next 2 years. We could see probably another 20 to 25% addition. And most of it is coming from, brownfield projects where they're taking over existing hospitals and then taking over the management of these hospitals, which means that less capital deployed for such acquisitions or such new bed capacity. And that will augur well for the long-term profitability of Narayana Rudalai. So I think one can look at adding it, maybe look at declines whenever the stock corrects a bit, then keep adding it to your portfolio. Long-term, it should do very well.
So that's the take coming on Narayana Rudralaya. Let me take this next query then. And this next query that I have is coming from Archer, who's writing to us from Madurai. Kunal, he wants to know about RVNL. He's holding about 1,100 shares at a price of 476. Cochin Shipyard also in his portfolio, 90 shares at a price of 1,621. He's asking you a very, very easy question. He's asking, when will RVNL hit 500 to 600 rupees per share mark? And when will Cochin Shipyard cross 2,900?
Yeah, it's sometime in the near future. I'll also give a very caveated kind of an answer. But I believe that both of these stocks have gone through a painful correction in the last 12 months, broadly, from their 2024 highs, March, April highs for these stocks. And now I think these these stocks could be into a process of a bottom formation over here. Now I still believe that the mid cap end of the market would still not be very vibrant in the very near term. They would take some bit of more time because now the markets would wait out for confirmation in terms of which of the mid cap names could start to outperform. So it's very difficult to anticipate that when would these stocks come back into a breakout mode. But I think eventually, if you follow a process of a long term, I believe that these are good levels where you can look to start even averaging out if you've bought at higher levels, because when these stocks form a bottom for themselves, or the bottom process is getting in place, you eventually see that these stocks over the period of say 1 year to 2 years would make a very strong comeback for themselves. So difficult to anticipate that when would these stocks make a comeback, but I think if you've bought at higher levels, it's a good time where you should look to even average.
Okay, that's the take coming in on both RVNL and Cochin Shipyard. Lancelot, coming to you. Next query coming in from our viewer, Mr. Ganesh, is writing to us from Bangalore. He wants to hold SBI, ITC and Bajaj Finance for the next 5 years. He's asking if this would be an advisable decision. What's your take? That's SBI, ITC, Bajaj Finance for a time frame of more than 5 years.
I think if its time frame is more than 5 years, I definitely agree with SBI and Bajaj Finance. And the reasons being that, SBI is the largest bank with the lowest cost CASA base in terms of cost of funds. And as the economy grows, it's basically a proxy for India's growth, because every person who needs, growth in the credit side will be a client of SBI at some point in time. Second is the bank is very clearly focused on technology. So we are seeing a lot coming from its app and its digitization. Customer addition is coming through the digital mode. A lot of transactions are taking place digitally, which is bringing the cost of operation down. So all this augurs well for SBI, given the fact that interest rates are also looking at being lowered over the next 12 months. Banks like SBI should be able to generate higher net interest margins, and that would generate better profitability going forward. SBI has also been able to keep its NPAs and slippages down to reasonably good levels, and so that is another reason why one can look at buying SBI. Bajaj Finance, as you know, they've come out with good numbers. You are seeing a lot of additions, additional growth coming into Bajaj Finance, both on the loan book side as well as the cost of funds in terms of raising deposits. The lower interest rates will help them reduce their cost of funds and then maintain or improve net interest margins. The other interesting thing that Bajaj Finance has done over the last couple of years has been to focus on the platform business, whereby through its app, it is adding more and more customers. It's able to provide them with services, and it is also earning service revenue from the transactions that the customers are generating through using their app. So that's one of the reasons. I think ITC, when you look at it, it's more of an unlocking opportunity rather than a pure growth opportunity. Its cigarettes business will continue to grow and continue to drive profitability going forward. But the FMCG business could be a drag on the profitability as well as on the revenue side. And that could, result in probably lower, returns for ITC going forward. So one would be a little bit careful at this point in time, because you have a lot of other FMCG companies who are
Right.
showing better businesses. So one can look at those instead.
All right, point taken. In fact, we have run out of time on this edition of Buy Now, Sell Now. Thank you so much, Lancelot, as well as Kunal, for being part of the show and resolving all the viewer queries, as well as patiently waiting by. But for now, it's a goodbye from Snehi, myself, and the team that put the show together. Thank you so much for watching. Stay tuned. Markets at Noon coming up next.
If you like this video, then like, share and subscribe to ET Now.